Eurasia is the largest continental area on Earth, comprising all of Europe and Asia. Primarily in the northern and eastern hemispheres, it spans from the British Isles and the Iberian Peninsula in the west to the Japanese archipelago in the east.
We making moves. We making major moves. We making moves. We making major moves. We going all in, like we got nothing to lose. We making moves. We making major moves.
What is up, everybody? I am Mr. Man. Welcome back to my channel. If you're new to my channel, please like, subscribe, and share the content. This is content that everybody can use. I understand the Spider-Man mask may throw you for a loop, but just recognize the position that I'm in, and I want to keep my identity to myself. However, the information I present is fire, and you're gonna want to share it because you're gonna need to know what's going on. As you can gather from the intro, we are talking about the Eurasian area today, the largest in the world. So this here is an MUO, Memorandum of Understanding with the New Development Bank and the Eurasian Development Bank on general cooperation between the New Development Bank, and hereinafter referred as NDB, and the Eurasian Development Bank, known as the EDB. So NDB is an international financial institution established under public international law pursuant to the agreement of the bank dated the 15th of July 2014, the purpose of which is to mobilize resources for infrastructure and sustainable development projects in BRICS and other emerging economies and developing countries, complementing the existing efforts for multilateral and regional financial institutions for global growth and development. Whereas EDB is an international financial institution established under public international law pursuant to the agreement establishing the bank dated January 12, 2006. So these banks were established specifically for a specific reason, the purpose of which is to foster development of market economies of member countries, their sustainable economic growth, and expansion of mutual trade and economic relations. Whereas the parties acknowledge the benefits of cooperation between them for the realization of the shared objectives. The parties recognize their common interest in promoting economic development according to their respective mandates. The parties' intent via the memorandum, which we're reading, to establish a framework for enhanced strategic, technical, and operational cooperation between them in accordance with the principle and objective set forth below. The purpose of this memorandum is to establish and formalize a framework for strategic, technical, and operational cooperation between the parties, such as a view to enhance collaboration in common areas of interest, to support the sustainable development and infrastructure projects in countries which are of common interest to both parties, as may be determined by each party's constitutive documents and policies. So here's the areas of cooperation now. Here is where the Eurasian Bank and the New Development Bank of the BRICS banks are cooperating. The parties may cooperate by various means in accordance with their respective mandates and strategies, including, but not limited to, early identification, preparation, co-financing, and other forms of joint participation in financial assistance for sustainable development and infrastructure projects, which we are going to be diving into, in countries of mutual interest, subject to the mandate and policies of each of the parties and geographical restrictions of their activities, exploring and pursuing opportunities in treasury management cooperations, conducting periodic consultations to coordinate operation and activities, performing analysis, research on macroeconomic industries and other fields of mutual interest in accordance with the mandate of the parties, exchange of information and promotion of knowledge sharing to benefit from each other's experience, resources, and expertise. Potential areas of cooperation may include, subject to the respective internal policies and procedures, rules and approvals of the parties, economic, financial, and business information on common areas of interest, information with respect to processing of potential projects for co-financing and mitigation, and management of risks arising from project financing. I'm not going to read the entire thing here. I want to read this last portion here. Strengthening cooperation in areas of mutual interest, including but not limited to clean transport and energy infrastructure, sustainable development, and modernization. In the context of such cooperation, the parties will endeavor to share their country and their expertise. Awesome. Where am I? That brings us to 2019. The Eurasian Development Bank research. We're going to go right down to digital infrastructure because that's what we were just reading about, the cooperation there. So the member countries. In recent decades, the world economy has been undergoing a digital transformation that continues to bring about substantial changes in all areas of life. This global trend has had a considerable effect on the business, societal, and state structures of all the ECB member countries. And that's a huge amount of countries there. After the global crisis of 2008 to 2009, digital industries became some of the most dynamic and promising ones in the global economy. In many developed countries, growth rates of the digital and information industries have overtaken that of GDP. Nevertheless, the growing digital gap between countries and regions narrow nation-focused approaches to digital securities issues and asymmetric opportunities and risk of the global economy for different economic agents are among the main barriers to digital transformation and the implementation of breakthrough technologies. Woo! Breakthrough technologies, we're jumping into all of these, and I will provide my thoughts on this. Not right now. I just want to read this to you guys here because I will provide my thoughts as we go along. So stay with me here. I'm reading the boring stuff that people don't want to read, but this is putting the connections together. We have a big picture here, and I'm filling in the color for you guys. We're coloring by numbers. You're welcome. International experience shows that digitalization contributes to the acceleration of regional integration processes. The process of this report is to comprehensively analyze and estimate the EDB member countries' digital potential on the basis of quantitative and qualitative indicators of leading international organizations for a more objective evaluation of the opportunities and challenges presented by digitalization in the context of the EDB member countries. So the digital economy has mainly been developed in industrially developed countries. So that would be Canada, US, China, Russia, where else? Like UK, Europe, Germany, Sweden, anywhere that's not an emerging economy, essentially. In 2017, the share of the digital economy in the U.S. GDP reached 7% of U.S. dollar over 1.35 trillion. And in 2016, the share of value added created by the digital economy in the European Union was 4% of the EU's GDP. In 2018, the digital economy accounted for 38.2% of the Chinese GDP, which is 2.32 trillion. Stuff is growing quick time here. So here we go. This is what I want to get to here. In the context of the Eurasian Economic Union, the EAEU, of which all the EDB countries except that place are members, the digital economy's share in aggregate EAEU GDP is less than 3%. So these guys are a baby still. Causes of the lag. Here's the reasons for why this has a slow uptick. Such underperformance compared to developed countries is attributable to a number of factors. The specific nature of the member countries' economic models, such as largely dependent on the agro-industry complex, relatively slow implementation of digital technology, and the need to catch up with the post-industrial countries in developing science and technology infrastructure. So they lack internet, so a country's economy can be fully digitalized only if its population and business in its territory gain broader access to ICT. ICT is information communication technology, so networks and related services. To this end, it is essential to work towards the creation and modernization of its backbone communication infrastructure in order to meet the growing demand for ICT services. It stands to note that starting from 2000, development of the digital economy's basic infrastructure has been quite positive in all EDB member countries. In 2000, long before this Bitcoin existed, as can be seen from the figure below, ensuring their population with internet access has grown considerably. So active government involvement is a prerequisite for digitalization. For this reason, the OECD has developed a list of measures required for governments to successfully implement a digital agenda. Develop a digital government strategy supported by an action plan and an impact assessment tool. Define a framework providing a political mandate, powers, and resources for designing and coordinating the implementation of the digital government strategy. Update the legal and regulatory frameworks. Finance the development of important key digital enablers, for example, digital identity, shared data services, shared business processes, and provide incentives for their use across the public sector. Focus on developing digital and data-related skills in the public sector. So that's getting everybody trained now. The public sectors, get them up to date with what's going on digitally, so that way they can be that cog in this giant machine. Because that's how we are. We're just a cog. We're at the bottom. We're the lowest rungs in this rail here. Implement a policy to support the development, but you and I won't be the lowest cogs anymore, right? We're working our way up that ladder. Not the corporate ladder, but the generational wealth ladder, because we're here reading these documents like this. We have an idea, cognitive idea of what's going on. Implement a policy to support the development of data-driven public sector and promote the strategic use of data and emerging technologies across the public sector. All right, they're getting them ready. They're priming them. Establish an open government data strategy within the overarching data governance framework and policy, engaging external stakeholders to manage each stage of the data value chain and support the reuse of open government data for value creation. In the case of the EDV member countries, their state digital economy developed measures and priorities are set out in the national strategy and a number of project documents on this subject matters. In respect of participation of those countries' governments in digitalization, the e-government development index is the highest in Kazakhstan and Russia. A survey carried out by the WEF found that most flexible legislative framework exists in Armenia and Kazakhstan. In the case of Armenia, it is attributable to the relatively fast growth of innovative companies, largely promoted by Armenian diaspora living in industrially developed countries. And now here they start talking about the initiative per Eurasian country. Armenia. In Armenia, positive digitalization trends have been observed since 2017. Their agenda is for 2030. Belarus started in 2017. Belarus adopted degree number 8 in the development digital economy, and they have where they have it. I don't know. Okay, so working parallel to the decree is a state program for the development of the digital economy and digital society for 2016 to 2020, intended to develop the digital economy, information and communication infrastructure, and computerization infrastructure. Kazakhstan. So for 2017 up till 2025, that's their strategy. Kyrgyzstan, 2017, 2040 is their strategy. Russia, here we go. To further develop the national high technology industries pursuant to the strategy of the development of the information society in the Russian Federation for 2017 to 2030, a program entitled Digital Economy of the Russian Federation was adopted in Russia in 2017, aiming at comprehensive and systemic development and implementation of digital technology in all areas of life. 5 main priority areas were specified for the period to 2024, which we're living through right now. Regulation, personal and education, development of research competencies and technological groundwork, information infrastructure, and information security. That's the 4 of them. The implementation of this program will help strengthen the role of Russia's digital economy by 2025. All the above mentioned countries, except for Tajikistan, are members of the EAEU, tasked in 2016 with forming a single information space pursuant to the EAEU 2025 agenda. So this country, this collective here, the Eurasian group, has an agenda of 2025. There's a lot taking place in 2025, isn't there, huh? That's when the Basel III Accord begins. In Canada, US, Mexico, China. We have 2020, the Eurasian Economic Union, factors and figures. There we go. About digitalization. In 2017, the Supreme Eurasian Economic Council approved the main areas for implementation the Eurasian Economic Union's digital agenda until 2025. 2025 is going to be something spectacular. The document defines the goals, principles, objectives, areas, and mechanisms of cooperation between the member states of the Union in the digital sphere. The digital agenda focuses on keeping up to date the established mechanism of integration, cooperation within the Union, taking into account the global challenges of digital transformation, ensuring ensuring qualitative and sustainable economic growth in the member states, particularly for an accelerated transition of economies to a new technological paradigm and developing new industries, markets, and labor resources. It will allow synchronizing the digital transformation and creating conditions for the evolution of the industries in the member states. Not only will information communication technologies be applied to the implementation of the digital agenda, but also new business processes, digital models, and digital assets will be created. 2025. Let's see what those are. Let's see those digital things here. So main areas for implementation, the EAEU digital agenda until 2025. So these need to be ready for 2025, son. Areas of digital agenda implementation until 2025. We have digital transformation of economic sectors and cross-industry transformation in the Union. Digital transformation of markets and goods and services, capital and labor. Digital transformation of integration management processes in the Union. Evolution of the digital infrastructure and the protection of digital processes. So let's go through the stages now. This is the 3 pillars of the digital agenda implementation. Modeling of digital transformation processing, elaboration of the first initiatives and launch of flagship projects considering the priorities of the initiative's development in line with the annex. Formation of digital economy institutions and digital assets, as well as development of digital ecosystems. Implementation of digital ecosystems and digital cooperation projects on global, regional, national, and sectoral scales. Which stage are we on? I would say we're just about stage 2, entering into stage 3 here. Here are the 4 stages of implementation. So first we have mobilization. Select the national customers, project coordination, select organization, function, and operation of national cooperation of components. Stage 2, synchronization, which is implementing now. Development of unified functional and technical requirements of standards, software, API methods, and integration with national information systems of the member states' national components. This is big stuff, man. Development of individual terms of reference for standards, standard software and API methods. Implemented. Now when it's implemented, after the implementation, now it's implemented. It's the development and launch at this point. Development of standard software and API methods, integration of standard software and API methods with the national information system with the member states, component and integration test as well as pilot operation with standard software and API methods, introduction of improvements after the pilot operation. What's going live in Asia with the HKMA and the PBOC in mid-year? We have Project Enbridge going live, right? MVP, minimum viable product. This is a live thing at this point. In June, EU's going live with asset reference token and e-money tokens in terms of their regulation. In December, we have MICA going live. This stuff is going to be live, man, in December 2025. You guys need to recognize this is going to be live. Ongoing activities. This is the evolution now. Execution of a report on the transfer of the standard software API methods and project technical documentation to the National Customers Coordination. Introduction of the relevant amendments to the project data sheet. Conclusion of the license agreement and the accepted certificates by the member states with regards to granting the right to use the unified search system with work without borders and standard software. So this is what I've been talking about now, the EAEU 2025 Digital Agenda, Prospects and Recommendation. This is the overview report here by the World Bank. Boom. So here we go. Thus, in November 2016, the Eurasian Economic Commission, together with experts from the World Bank, began working to study the current situation and make recommendations for reaping the economic benefits of digital development. They studied the potential of creating a common digital space and implementing the digital agenda of the EAEU by 2025, aiming at creating a single digital economy in the region and achieving associated digital dividends. Very interesting word. The vision of the EAEU Common Digital Space is based on the creation of a common, secure, scalable digital infrastructure, there's that word again, and platforms for the development of the Union's digital economy, which would include broadband internet access in all countries of the Union and would create opportunities for the emergence of innovative industries, new types of services, new jobs, growth, and increased efficiency of interaction between countries. So we saw that they want to start teaching people about the digital economy. From what perspective or what ocular view are they going to teach people? From the lower rung, of course. Here's how you work on electric vehicles. Here's how you upkeep artificial intelligence. Here's how you make drag and drop apps. Here's how you can be a part of this new society, and we're still not going to tell you what's going on because you don't deserve to know what's going on, right? Like, why? Why would we? So the joint statement by the EAEU member states on the impact of Eurasian economic integration on achieving the UN Sustainable Development Goals during the Sustainable Development Goals Summit under the auspice of the UN General Assembly last year, September. Mr. President, on behalf of the EAEU member states, including the Republic of Armenia, the Republic of Belarus, the Republic of Kazakhstan, the Kyrgyz Republic, and the Russian Federation, and in my capacity as a representative of the state presiding over the EAEU bodies in 2023, I would like to inform you how the development of economic integration process within the EAEU contribute to the achievement of the Sustainable Development Goals by the EAEU member states. So if this isn't good insights, I don't know what to say, because this now is a culmination of everything that had taken place, and now this Mr. President is talking to us. Or talking to the Mr. President, actually. Currently, the EAEU is among the advanced regional integration organizations where the free movement of goods, services, capital, and labor is ensured. The EAEU's main goal is to improve the well-being of the citizens of all of its member states. To achieve this goal, much is being done to create common markets within the EAEU in various areas of cooperation. Today, the EAEU represents over 184.3 million consumers, and the member states' aggregate GDP exceeds 2 trillion. The principles of quality, mutual respect, and consideration for the interest of all participants, as well as the functioning of the customs union without exception or restrictions underlie Eurasian's integration. This close cooperation serves as a source of economic development for the participating countries. Each EAEU member state takes specific steps to achieve sustainable development goals based on national program documents and development strategies and concepts. At the same time, economic integration with the EAEU serves as an additional factor that contributes to the achievement of the SDGs. Boom! Digital agenda in the EAEU countries, the case of Kyrgyzstan. Declared the Digital Agenda 2025, which we started to read already, shows the interest of countries towards the topic of economies, digital transformation. The Kyrgyz Republic is not an exception. The government accepted national policies that cover the subject of digitalization. Some key factors of which are identified. The article includes the analysis of policies within the EAEU, state policy, national strategy of development, and the concept of digital transformation. Main indicators of the digitalization of all 5 EAEU member states, as well as an investigation of digitalization in agricultural sectors, tourism, and sector and creative economy. I had to dive into it. Some indicators related to the digital transformation. The EAEU Digital Agenda does not define certain indicators which the Union itself and members separately should achieve by 2025. The joint survey done by World Bank and Eurasian Economic Commission operates with figures such as 2025 general target indicators. Among them are increase in the share of the digital economy in the EAEU to annual GDP growth. Growth of the number of employees in the high-tech sector, increase in productivity of the main sector of the economy, increase in exports of digital goods and services, as well as in digitally mediated exports of traditional goods and services. So look for this stuff happening. Look for this stuff happening. Look for the supply chain connectivity taking place again. Look for the establishment of the old world being transported into this new world. The old world has fragmented now, and things are just all over the place and scattered. And look for it being re-established now in the digital economy. These are just indicators of what you can look for. They're not giving specifics. It's just an overview, a high-arching overview of what you can look for. And in that high arch, in that umbrella, there'll be different indicators to look for within that. Experts did not divide target indicators by countries and outline common for the EAEU marks. For example, implementation of the EAEU digital agenda can assist in achieving target values of up to 3% in employment of the ICT sector, and it will be a 2.4% increase in employment rates by 2025. So look for that. Look for the employment rates for them to achieve this by 2025. The digital services share of the total export was 28.3% of the EAEU in 2015, and by 2025 the value should be 34 to 36%. Look for those indicators. Besides target indicators, the survey quotes figures of potential influence of digital transformation on the economy by 2025. Thus, in case of provision and universal broadband access can secure a total GDP growth of 1.7% of the EAEU by 2025. The savings results from removing legal barriers to the implementation is a whopping 2.6%. According to the EDB, the share of digital economy in the aggregate GDP of the EAEU is less than 3%. As we sit here and talk about digital infrastructure being implemented by 2025 in the Eurasian area here, last year, November 24th, I had posted this. The 1% of this world are already set up with blockchain and digital infrastructure. As we've just learned now, Eurasia is set up by 2025. And now they've admitted it. Listen to this.
It's still a pretty wide gulf, and it's sort of like there's a world that was pre all of the developments with, the cloud, etc. And then there's the post world, and the post world is pretty rapidly adopting these, but the rest of the world is not moving to that very quickly. So, one part of our business model actually is that the technology we develop for our business, we also license to others. So we license to other financial institutions. So all sorts of things that we build in our business, we will actually license and offer to other companies. And it's still really hard. The adoption is still really slow, and it's really hard. And I think it'll pick up. I think things will go more rapidly. Whatever 1% of the world's assets are digital and 99% are still analog. So there's still a lot of work that has to be done to bridge that gap. But it has been probably slower than I would have thought.
As we learned, that 1% could be Eurasia, even though they're the biggest union that exists out there. And just continuing on with the infrastructure talk here, digital implementation of infrastructure here, I want to bring this to your attention as well. Ripple is a software company, and we've created Interledger, which is ILP, and the XRPL. ILP was given to the W3C, the Worldwide Consortium, W3C, to be used as part of the internet infrastructure, which is like the www, whatever it is. We as a company would not be able to succeed if our software was proprietary. You need something like the Internet Protocol, so essentially the bank can utilize open software, which is the Internet of Value. Let's jump into this.
That we are a private software company, and the solutions that we developed incorporate the capabilities of these open source softwares. Specifically, there are two technologies that we really focus on. One is called interledger protocol, and the second one is called XRP ledger. Basically, the former is kind of like the blockchain technology. The latter is more of like a digital asset, like a crypto asset. And from our perspective, it's not possible for us to succeed to the extent that we can.
So, for you individuals who have not caught on to what it is yet, the way I describe it now is very, very plain English. Picture the road. There's roads, there's intersections, there's stop signs, there's yield signs, there's houses along each axis of that road. That is the infrastructure. On the side of the infrastructure, you have the houses. As you go down further, you have the enterprises, corporations, you have the big banks, you have those siloed entities that want to keep their infrastructure intact and private. Those are the private permissioned companies on top of the public infrastructure, right? You need that infrastructure to have these private permissioned companies to be able to exist within that. And that's how it goes. With the vehicles now on the road, picture that vehicle within that infrastructure rail. That vehicle can now be seen as a USDC. We have stable coins now, and eventually CBDCs will exist within that world as well. I'm not too sure how they're going to play together, but we'll find out as time goes on. So for you to purchase this new vehicle, or purchase the actual car itself, using this digital currency, it may not be XRP for the world to use as in the background. It might be something like a stellar lumen, an XLM at this point, because that is more focused on the retail side of things, whereas XRP is focused on the wholesale side of things. So there is levels to this thing. So you have different layers of what's taking place. The wholesale down here, layer 1. Picture all those sandwiches, those 4 layers now as layer 1. All these layer 1s. Then you have layer 2s on top of that. Going back now, within this layer 1, you might have a Ripple, you might have a Stellar as a layer 1 as well. These are global layer 1s, right? This is the infrastructure level, and XDC on top of that too for this trade finance, which Ripple also connects with. I'm pretty sure Stellar flies within that range as well. But within that vehicle now, to purchase that vehicle, you have USDC within the Stellar rails on that road which we were just talking about. So for that vehicle to be purchased via an NFT, which is the smart contract, which a smart contract gets kept in your wallet once you purchased it, you have your phone, you have your USDC, or your QCAD, or your digital shekel, or your e-Corona or your e-Naira, wherever it is you're at. You have your currency, whatever that new e-currency is, and you're typing it into your phone. I'm going to pay 15,000 USDC for my vehicle. Send. It's now sent immediately to that seller of the vehicle. How? Because in the background, on those rails, that USDC can exist within those rails on that XLM. Boom! Immediately sent to that other company, individual, enterprise, small organization, individual company, whatever it is. And that's how that works. So that's our first layer ones. On top of that now, there are different layers. Because even within the XRPL ecosystem, there are different layers within that. There is the digital layer, the payments layer, there is the... let me pull this up. I'm going to pull this up. That's what I'm going to do. So we are in the ecosystem of the XRPL or the Stellar Protocol at this point now. Whichever one you want, whichever layer you decide to operate on or utilize. If you're in the real world, they're probably utilizing the XLM. So here's the payments layer itself. So we have the bank layer, we have the FIS, which would be the processing layer for the bank, which has the embedded finance. Then we have the network or the Visa, like the actual Visa, MasterCard, whatever you choose to tap away with. We have the regular banks at this point now, the retail banks, and then you have other individuals such as Square, Stripe, PayPals of the world, and that goes to the merchant and the payer, which would be the you and I of the world. That's how the payments cake works, and that's just one layer within this one XRPL ecosystem. Because in the next layer of the XRPL ecosystem, there's still the digital identity layer, right? So there's layers within layers within layers. Because there's different layer ones, XRPL, Stellar Protocol, you have Zilliqa, you have a bunch of them, but they all operate differently. And within those layer ones, you have different layers on top of that too. This stuff goes real deep, real deep, man. I don't. Okay, and this is the last thing I want to show you here. I'm lying. Let me go back. Let me go back, and we'll finish this off here.
Which would be this kind of ubiquitous Internet of Value. As a private company, if the software that we're using is strictly proprietary, you really need something like the equivalent of Internet Protocol, which means that when we go to these financial institutions and we're selling our software to them, the fundamental software that's powering it and the fundamental capabilities that are really unique, that make our software unique, that is open source, which means that if a big swath of the market decides to use Ripple software, but another swath of the market decides to use software from a bunch of different providers, that's okay because it's interoperable. It'd be like the idea of if Google was using one internet protocol and Facebook was using another internet protocol, so you as a consumer would need to sign up for two internets, that's a big pain. That's something that you want to avoid. So it's this idea of like, not just network effects, but a network of network effects, that Ripple's success should lead to the success of other companies that want to kind of contribute to the development of this ecosystem.
How does that interoperability work, you ask? That's a really good question. Let's find out. So this, in 2019, Ripple, MakerDAO, and Cosmos, the Kava network, had been working on an arrangement where XRP as a stablecoin to settle remittances for crypto. Interledger was used in this setup. This scenario was created for XRapid, which is now RippleNet, now Ripple Pay, trusted entities. For this setup to work, they realized they needed high volumes. Listen to this.
Going Bitcoin, and we even had DAI, and we were using a non-custodial wallet that linked together things like Lightning with payment channels and DAI payment channels, and allowed people to swap between those assets anywhere in the world, and made the markets for those. But we quickly realized that going into 2019, that just crypto payments it just wasn't scaling like we thought it would. We thought crypto payments was going to take over the world, be the biggest TAM, the biggest market opportunity. But we quickly realized in 2019, following the bear market, that while crypto exposure and speculation in the markets was a primary driver and a real use case, crypto payments was really struggling to take off. There were companies like Ripple, forwarding kind of that initiative on the institutional side. We were trying to forward that using interledger technology on the more decentralized side of things. But we quickly realized that the total crypto payments in the space at the time was roughly $30 million a month. And that's, if you're collecting, a few points on that, you're collecting the spread between those payments. You need to have very substantial volumes to support any type of high growth business. And it just was, we knew at that time we were years away from being well positioned to take advantage of that. The markets just weren't ready for that type of product. So we forcibly had to pivot. We saw the success of MakerDAO giving ETH speculators a way to get margin in a decentralized fashion with loans and DAI. And it was actually through one of our other investors, Ripple. They asked us to put together a proposal. So we were more like a software and development shop at that time. They asked us to put together a proposal for effectively like a MakerDAO system, but using XRP as collateral. And we went to the whiteboard and we drew up a design, and it was effectively a side chain that was able to take assets on XRP, move it over, move it to the side chain, and then use it as collateral where we could issue our own stable coins. And really the goal for Ripple's perspective was they wanted to have a stable coin that they could give to their remittance businesses, money service businesses that were using their XRapid products and others. But once we designed that, we realized, well, actually, shoot, we could just design this for all the other assets. We can make a generalized lending platform. And from that point forward, we really did a 180. We pivoted fully mid-2019, and we launched the Kava platform as it's known today, which at the time was a single application blockchain that offered collateralized loans on a variety of digital assets. But really that laid the groundwork for what we're doing now, which is a whole portfolio of financial services for crypto.
So we're talking about the blockchain of blockchains here. This is Cosmos. Cosmos is like the bridge from one blockchain to the next blockchain. Then you need a contract between this blockchain and this blockchain, right? There's something that's in between there. That's the Cosmos blockchain, the connector of blockchains at this point. We need a contract here. Polkadot establishes parachain contracts between these two connecting networks, the bridge, the Cosmos bridge itself. Now let's look at the Cosmos ecosystem, because I just want to focus on one of them, which is XLR. Okay, that's what I want to focus on. So here's Cosmos right there. Okay, this is part of the Cosmos ecosystem. Let's jump into this quickly. So this right here, I had put this out today, and I had stated JP Morgan's Project Guardian in Singapore. A proof of concept was established using the XLR network, which is in collaboration with XRP Ripple at this point, which has recently come out to announce their partnership. So JP Morgan had announced their partnership with the XLR platform on Cosmos, which partnered with Ripple, or the XRP ledger. Do you see that connection? Now let's hear this, because again, none of these are my words. I'm just showing you guys the connections here. Putting the pieces together, you decide what you want to invest in. I'm just showing you the pieces I've come in contact with, because shit, pardon my language, I'm invested in this stuff. I'm not even gonna lie. I'm invested in some XRP. I'm holding some Cosmos. I'm holding some Polkadot for their parachains. I'm looking into XLR next. Let's do this.
So with the industry challenges set, we had the foundation for what we wanted to tackle within our project. Our thesis, as Christine said, was that tokenization and smart contracts could harmonize and streamline portfolio management across both traditional assets and alternative assets. And from an alternatives perspective, make them more inclusive, transparent, and efficient. So, we had a clear goal. We wanted to set up a technical POC that would enable a portfolio manager to seamlessly manage a large number of discretionary portfolios that are invested in multiple traditional and alternative assets across a variety of blockchain platforms. To do this, we assembled leading asset managers and blockchain solutions providers to create a holistic ecosystem that we could test. Apollo, JP Morgan, and Wisdom Tree provided traditional and alternative assets to be tokenized. And in order to set up this fragmented environment, we had Onyx and Oasis Pro tokenize these assets on 3 different permissioned blockchain environments. We had a permissioned zone of the Provenance blockchain, the Onyx Digital Assets platform, and a permissioned Avalanche subnet. And to provide connectivity between all of these different platforms, we implemented not just one, but 2 interoperability solutions, Axelar and Layer 0.
So we saw how Axelar fit in there, and the gentleman said Provenance as well was utilized. So here I had posted back in the day, Provenance blockchain with Cosmos to support regulated financial institutions, over 8 billion of total locked value of real world assets on chain. This is no longer a proof of concept. This is no longer fringe. This is core use. I'm taking you guys full circle again here. Full circle. Not USDC circle, but just full circle in terms of where I started to where we're going.
My journey was at Citi. I was at Citi for 18 years around the world in various senior operating jobs and implemented blockchain twice, once with NASDAQ in 16-17 and once with Alibaba and Ant in 1920. So along with Christina, a bank practitioner, cut our teeth on blockchain. But I'm CEO of Provenance Blockchain Foundation. We are purpose-built to support regulated financial institutions with over $8 billion of total locked value of real-world financial assets on chain, and helping financial services participants serve their customers. I think with FTX, it was the end of innocence in crypto, and we're starting to turn the page to a more enduring chapter, right? No longer crypto token trading as the focus and taking up all the oxygen and energy, but really turning to how do we use decentralized platforms, issue digital assets to transform businesses. Our view is in financial services, that impact is material. It disintermediates a range of costs and time. And so I think this is we're starting the more enduring chapter. 2022 was the first year of true institutional adoption by leading firms, several of which are on the stage today, in core business use cases. This is no longer POC, this is no longer fringe use cases. So we've begun the next chapter, and it is getting to $1 trillion plus, and we'll get into the various use cases that are live and coming soon.
So all that to say, Ripple has collaborated with various organizations to contribute to the Eurasian 2025 agenda through initiatives such as the World Economic Forum. Ripple's collaboration with the WEF focuses on enabling the instant and seamless flow of value globally through the Internet of Value concept. By utilizing blockchain and cryptocurrency technology, Ripple aims to enhance financial efficiency, equity, and inclusion. EY, which is Ernst & Young, they are a consulting institution. The EY Ripples program. Ripple is partnered with EY through the EY Ripples program. This is named after them. Ernst & Young Ripples, EY Ripples, which aims to positively impact the lives of 1 billion people by 2030. This ambitious goal, this ambitious global corporate responsibility program mobilizes more than 1 million people across EU member firms and their communities to drive long-term change in 3 focus areas. Through this program, Ripple is actively working towards creating a positive impact on the global scale. So I know this was one of my shorter videos. I kill myself. Alright, I do hope you guys found value in these videos. I hope you found value in the connections. I hope you found value with where Ripple connects and where Stellar connects, and learning about the layers and the Eurasian platform going live 2025. Don't forget, we also have Mbridge going live, which is Project Mbridge, which has the multi-CBDC coming live mid-year this year, 2024, which is out with being led by the HKMA, the Hong Kong Monetary Authority, and PBOC, along with the BIS. I do want to have a conversation with you guys about infrastructure, because we're talking about payments infrastructure here, and that's what's taking place here, the digital transformation. I love you guys. I'll see you on the next one.
We making moves. We making major moves. We making moves.